The S&P 500 closes out May with the best May going all the way back to 1990. Now, is this going to be bullish for stocks? Because on Friday, we learned about a major warning that could cause panic in stocks. And after the bell, we got more tariff news. So what does this mean for the stock market? Coming up. Now, before we come over and talk about the warning that Jamie Dimon gave us on Friday, let's take a look at the SPY real quick. Notice we had a very bullish candle. The prior month, we saw that big hammer candle. And if we pull a Fibonacci retracement on the monthly chart from the swing low right here up towards the high, notice we came right down to the 61.8. Is this going to be part of a much larger ABC pattern on the way up? One thing I do want to turn your guys' attention to is look at the MACD indicator on the monthly chart. If indeed we come back up towards these highs, it's highly probable we're going to have some type of divergence setting up. Then as we come over and we start looking at the weekly chart real quick, how do we close out the week? Well, now we can see we've had 1, 2, 3 consecutive weeks where we've just been chopping around up in this area, and we have a large gaping gap right below us. MACD indicator is crossed to the upside. However, it is substantially lower than where it was when we're up here towards all-time highs. Then when we come over and we start looking at the daily chart real quick, something we were talking about last week, is this going to turn into a double top? Top number one, top number two. If indeed that pattern is going to play out, we got to break below this swing low at about 575.54. If we can break that swing point right there, then we have a potential for that double top, and that double top target would not only come down towards the 38% retracement, but it would also be enough to fill the gap. The MACD indicator on the daily chart is kind of flatlined at this moment. However, could Jamie Dimon's latest warning actually be the catalyst for the next shoe to drop in the market? Jamie Dimon says, "You are going to panic," tells regulators about what will happen when the bond market cracks. And he says, it's not if, it's when. He says it's only a matter of time. However, if Jamie Dimon is correct and the bond market does indeed flip out, we're going to see stocks substantially lower. And what could be some of the catalysts to actually get the markets moving lower? Let's not forget, last week, it wasn't just one court, it was 2 courts that actually blocked Trump's tariffs. Now, if you guys trade the futures markets out here, you've probably seen this massive move on the way up. Now, I blew up several of my prop firm accounts, 20 Apex accounts. I think I smoked my Take Profit Trader account. And luckily for the daily loss limit, I did not lose my MyFunded Futures account or my Tradeify account. So sometimes daily loss limits are actually good. Now, I'll let you guys know, Take Profit Trader, 30% off, no activation fee, and no daily loss limit. If you want to take advantage of this offer, use the links in the description box down below. Use code epitome at checkout. But I was looking at this. This happened when that court blocked Trump's tariffs. We've seen the market rocking up. This was the same time as NVIDIA had earnings. Now, on this move up, I got aggressive on the sell side. Why? I looked over at NVIDIA, and we see right here, NVIDIA had earnings coming out, and we can see right here at about 5 o'clock, NVIDIA really didn't go any higher than that, break the 5 o'clock high until 5:30 in the morning the following day. So as I seen the S&P 500 rocketing up, I'm like, you know what? It cannot continue to go up. NVIDIA is not going up. Everybody got ahead of herself. However, I was not aware of that news out there. But then if you thought all that saga was over, the very next day, Trump's tariffs face legal battle as the federal appeals court temporarily blocks that trade ruling. So when we go ahead and we look, we've seen that big, massive move on the way up. It came all the way back, gave it all the way back. And even on Friday, we went a little bit lower. Now, something that was actually very bullish out there, if you are bullish for the market, on Friday, we were selling off. However, the market was unable to hold those lower prices, and we got a very substantial bounce going all the way into the close. And keep in mind, beginning of the month, we're going to have new 401k money entering the market. Was this rally up nothing more than window dressing, or is there more to come this week? If you think that's going to be the case, let's not forget, after the bell on Friday, in case you guys are unaware, Trump doubles down on steel tariffs, the 50%. And, just when everybody thinks, you know what, the courts are going to step in, we're not going to have these tariffs, they're going to go away, everything is fine, come on in, the water is warm, we're going to all-time highs, Trump doubles down and says, hold my beer. Here we go. Now we come over, look at the fear and greed index. We closed out last week sitting at 62, and we're getting closer over here to that neutral territory. Then as we come over, look at the most recent investor sentiment survey, last week we came in at 32.9, which dropped down from the prior week of 37.7. The bears also came back in at 41.9, which was up from the prior week at 36.7. However, the sentiment shows that the bears were stepping back in. Now, I want to show you guys something I don't see a lot of people talking about. We come back over and we look at the SPY on the weekly chart. We talked about having 3 weeks back to back, just basically consolidate up here at this level. Then if we come over and we look at the breadth real quick, we look at stocks above the 20-day moving average. Now we are at 57.34, but notice, unlike the S&P 500 where we had three weeks back-to-back consolidation, notice what we have out here on the stocks above the 20. We had that big nasty candle. So under the hood, we are starting to see a little bit of cracks out there. We look at stocks above the 50. We see the week before last, a little bit of a down week. And then last week ended up being nothing more than an inside day. If we look at stocks above the 200 period moving average, this is a little bit weaker, coming in at 48.8. So we still don't have a majority of stocks above the 200 period moving average at this moment. And we can actually see the week before last, we actually made a new low from the prior week. This past week, looking at stocks above the 200 period moving average was actually nothing more than an inside day. Now, if we come over and look at the Dow Jones versus the transportation index, we see the Dow Jones has recovered pretty substantially. But then if we look at the chart on the bottom, look at the transports. The transports are a little bit lagging at this moment. And let's not forget, up here at this high where the Dow had the double top, the transportation had the divergence that basically called that move lower. Then if we come over and look at the yields, we look at the 10-year versus the 2-year, we see it's on the rise once again. If indeed the yield curve starts to steepen again, that again will cause more problems out here for the stock market. Then if we come over and look at the SPY versus HYG, this is actually kind of bullish out here. Look at the S&P making a lower high, but if we look at HYG is at the most recent high that we've seen going back several weeks or even multiple months at this point. So we have a little bit of divergence between HYG and the SPY at this moment. Now, if we come over and look at the futures markets real quick, let's look at the 4-hour chart. Could we be setting up a head and shoulders pattern? If that's going to be the case, left shoulder, head, and potentially right shoulder somewhere over here. Now, we'd have to break the neckline in order to validate that pattern, but that's most certainly something I do want to pay attention to. Now, if we look at the weekly profile, notice what we have. We have a D as in dog shaped profile. And this whole area of the profile up here, very, very thin. So if we start cracking value area high, I do think the market's going to come back and try to re-auction that area. Value area high coming in at 59.35. The point of control coming in at 59.20.5. Then we have value area low coming in down here at 58.99.00. Now you can see we close near the point of control. If we start breaking value area low, I want to target down here towards these candle bodies on the 4-hour chart about 58.79. We breach below that. Then I want to target kind of back in that minus development area about 58.48. We breach that. Then I'm looking here at this next high volume node at about 58.15. However, I want to warn you guys, if we break value area low and we start coming back above it, I then want to target the point of control. I then want to target value area high. I then want to target this whole minus development area, then maybe even all the way back up here towards the candle bodies and maybe even the highs from last week. If we can break the highs from last week, the cash market and the SPY have the potential to make new all-time highs. We scroll the futures markets back a little bit. They're a little bit further away from all-time highs. However, when we did scroll that out a bit, did you guys see what I saw right above us? We scroll this down a bit. We have an untested point of control up here coming in somewhere in the ballpark of 6185.75. Now, right now we're miles away. I don't see the case. We're going to make it all the way up here quite that high this week. Jumping back over. Now we come over and look at the dollar index real quick. Is this going to form a double bottom pattern? We came right back down within this wick. So if we had this zone mapped out, you can see we did come into it. We have an inverted hammer, which could be part of a bottoming process since we had a couple bars on the way down. Now, if we start to firm up out of here, will the dollar start to get stronger? And if the dollar gets stronger, are we also going to see the bond market on the move back up as well? Because if we look over the past week, we saw bonds actually slipping down a bit. And that still does not take away from the fact we have an ABC pattern up above us at about 4.861%. Now, we already violated the swing point over here. If we do come all the way down below 4.12, that would invalidate this potential ABC pattern to the upside. Now, if we come over and we take a look at gold real quick, gold is still within this channel, a little corrective channel. As long as gold can stay below this trend line, I want to give it the benefit of the doubt that it's likely going to try to work its way back down towards this lower channel. If we can break above this upper trend line, watch out for the market to come back into towards this box, 34.32 up here to about 35.09. If we get up that high, we're probably going to make a run and make new all-time highs. Now, we come over and look at the QQQs real quick. That is one heck of a bullish move on the way up. We had that bullish hammer candle. We had confirmation of that hammer candle out here this week. And notice on the weekly chart, we are above. We got within the wicks of all-time highs on the QQQs. We are potentially going to set up some type of divergence out here on the MACD indicator. Then if we drop down towards the weekly chart, notice what we have. We actually made a new high this week from the prior week. Now we do have a wick on the top, a little bit of a wick on the bottom. MACD indicator not really showing a lot of strength. We do have a bullish cross, but it just is not showing a lot of strength. And I'm a little bit concerned with that gap that we have down below us. Coming over here on the daily chart, you can see the MACD divergence setting up. We have top number one. Then we had a slightly higher high before we pulled back a little bit. However, the MACD indicator at this moment is not confirming those highs. However, we can kind of draw a trend line out just like this. One touch, two touch, three touch, four touch. If we lose that trend line, then we're probably going to come down and try to retest 505.24. We breach that, then it's going to be lights out. We're probably coming all the way down towards this gap being filled and that 38% retracement. The double top-ish looking pattern would also come in right below that at about 484.79. If we dive down real quick and we look at the futures markets, look over here on the 4-hour chart with the weekly profile. We have that D as in dog shape profile. Something I failed to mention when we were looking at the S&P, we get a D-shaped profile. Quite often it'll end up setting up some type of trap. So the first way we break could end up being nothing more than a trap. Then we see the market run back the other way. You can see we have a very tight value area this week, and we have a huge minus development area within this profile. We had the quick move up, the quick move down. Not a lot of volume is transacted around that area. Now we can also be set up a head and shoulders pattern, left shoulder, head, and some type of right shoulder over here. And then we'll see if indeed that will take us to lower prices. And if we do go lower, watch out, that could be nothing more than a trap, at least if we end up breaking lower first. Now, if we look at value area low, that's going to come in about 21,299.50. Point of control will be up here at 21,467. Value area high will be 21,517.5. Now, if we do start breaking value area low, I want to retarget these candle bodies on the 4-hour chart, somewhere in the ballpark of 21,178. We breached that. Then I look down here for the wick of last week, and then I want to start to target some of these high volume nodes on the composite profile. The first one being about 20,966, and then the next one down here about 20,630. That would bring us, if we look left, right here towards the minus development area. If we breach that, then we're looking for gap support, potentially gap being filled. Then this untested point of control down here coming in about 20,138. Let's not forget, when we look at the economic calendar for next week, what do we have in store? Monday, we have some ISM data coming out. Then at 1 p.m., Jay Powell is going to be taking the podium. We come over and look at Tuesday, we get the JOLTS job openings coming out. We look at Wednesday, we get the ADP non-farm employment numbers coming out. Then on Thursday, the ECB has their interest rate decision. 8:30, we have the weekly unemployment claims. And with the ECB decision, pay close attention. During the press conference, that ends up being the mover, and the euro is the largest weighting of the dollar index. So if the dollar index gets moving, that could cause some moves out here in our stock market. Then on Friday, are we going to start to see a weakening of the labor market? We get the average hourly earnings, we get the non-farm employment change, and we get the unemployment rate. They're expecting 130,000 new jobs to be added. Is the market going to be disappointed? Let me know your thoughts in the comment section down below. Now, before we look at the daily volume profile levels on the 30-minute chart, I want to remind you guys, I stream live Monday through Friday. If you guys don't want to miss the next time I go live, make sure you subscribe. You have the bell notifications turned on for all. This week, we have more Take Profit Trader accounts to give away. Now, if you notice on Friday, we were unable to take out the P point, which means that Sunday night when the markets open, I'm going to be highly focused on where that new P point is. It's going to be a target I most certainly want to aim for Sunday night or even going into Monday. If we look at the volume profile shape, this is going to be a P as in Paul shaped profile. And notice we're closing near the upper end of the range. Value area high coming in at 21,399. The point of control at 21,367.5. with value area low being 21,275.5. If we can break value area high, then I want to see, all right, can we start working our way back towards some of these low volume nodes on the profile from Thursday? However, if we do break value area high and we start coming down, I then want to target that point of control. I then want to target value area low. I then want to target this minus development area of the profile at about 21,215. Anything below that, I would turn my attention back down towards the candle bodies on Friday, about 21,114. Then if we break that, well, guess what? We're probably going to go substantially lower. I'd want to turn my attention down towards this next untested point of control, 20,938.75. Now, if you guys like to see what makes Take Profit Trader the #1 prop firm out there, make sure to watch this next video right here.